Hi, welcome back. Let's quickly have a look at this bonus video on the differences between a maker and a taker in the financial trading, especially in futures trading. Right, you do remember that in a recent video we touched on these terms when we were explaining the types of the market orders, and I didn't want to get too technical there because it seemed things were getting a bit messy there, but I hope you understood whatever we said there. So now let's look at the difference between a maker, who is a maker, and a taker in the financial world or the financial trading. Right, a maker in trading refers to someone who provides liquidity to the market by placing orders that aren't immediately matched or executed. So when we talk of liquidity is when a number of traders, a reasonable number of traders or a lot of traders are willing to trade, meaning they are willing to buy and sell at a specific time. That is what we call liquidity. And then volatility or volume is when, in fact, one particular trader or an institutional trader would enter the market with huge capital or huge funds or huge margin, huge contract, huge lot size. So that is what it means by volume. So it means that one person can actually move the market with huge capital, but with the liquidity, a number of people, hundreds of people can actually be engaged in buying and selling, yet they are not moving the market that much. So that is the difference, right? That's beside the point, but it's important that you note, right? So a maker in trading refers to someone who provides liquidity to the market by placing orders that aren't immediately matched or executed. So these orders, right, sit in the order book. I've explained what the order book is. These orders sit in the order book waiting for someone to take them. In return, makers often receive a maker rebate. Rebate, the spelling is E-R-E-B-A-T-E, a rebate, right? And that is a small percentage of the trade value that is paid back to them as an incentive for adding liquidity to the market. So that's what they do with their funds, right? I bet this may be a new term to you. So they just engage in trade, not actually executing trade, but they just put in orders just to provide liquidity, or better still, volume. So I think volume will come into play when the trade is actually executed. I hope you understand. So there's something we call COT. It is in the word Forex. Yes, in fact, in the financial world. If you want to know more about it, just check that. Right. So this is what they do. And then when they engage in this kind of trades, their aim is just to get reward. That is what a maker. So let's look at key concepts where we will once again look at who is a taker. So once again, a maker places limits, right? This is what they do. They place limit orders at a specific price, right? Limit orders are not instant orders. They are just sitting in the order book, right? So, and what do they do? By adding liquidity to the market. When they place these orders, they add liquidity to the market. 3, helps stabilize the market by creating a more active order book, right? Because when there's more orders placed, the system has it gives it the ability, or let's say that readiness, that future, that hope that there's more in the market, or more volume, more money, more capital in the market. You understand? So this is what they do by when they say someone is a maker. So many a time in my weekly analysis on forex trading, there's something like this. What I do every week before the start of the week, probably on Sunday, I do a market forecast for the whole week, where in the course of the week we will be following up to see if whatever we assume to be the initial analysis is going to play out. We give you guidance and then give you some signals for free. Sometimes it's on premium, so you will have to check the page, the channel, and then subscribe to this, right? So who is a taker? A taker executes trade against existing orders in the order book, right? So this is what they do. They execute trades against existing orders in the order book. So what it means is that If the maker has placed, let's say, a sell order, a sell limit order, what the taker will do, they will take the counter trade. That's what they do. So you see, there's a lot going on in the market, right? So they also intend to what? To remove liquidity from the market. That is what they also do, right? Now let's look at maker rebate. What it is, I think I've already touched on that. A reward for being a taker. A maker rebate is the reward. So many a time, if you register a newly account on any of the exchanges, right, the SEX, that's the SEX, the CEX, right, the centralized exchanges. When you enter newly or new, there's this promo that they run. They ask you, they give you a rebate, right? So you trade this, and then when you are successful for that volume, then they'll give you a return, which you can actually maybe cash out and then use. So it's after you have traded that required volume that they want you to trade. So I think this is not a new thing to you. You may have seen that, and that's what it means, right? So a maker rebate is the reward they get. Typically a small percentage of the trade value paid by the exchange as an incentive to maintain liquidity. So that's what some people do. If you don't know, this is what some people do. Whilst you are trading, people are providing, institutional traders are providing liquidity to the market. That is it. So now let's look at some example maker scenario. You place a limit order, you place a limit sell order for 1 BTC at $40,000. Your order sits in the order book until a buyer, means a taker, matches it. You understand? So they place it there until someone actually takes that trade. So you place a limit sell order for 1 BTC at $40,000. Your order sits in the order book until a buyer, who is a taker, taking the counter, matches it. Now, once the trade is executed, you might receive a rebate, like let's say 0.02% of the trade value. That is what it means. Now, rebate benefit. If the trade value is 14,000, a 0.02% rebate would be $8. This offsets your trading fees or adds small profit. They add small profit. So maker rebates are commonly seen in platforms like Binance, where active traders use these incentives to reduce overall trading cost, right? So maybe this is a new thing, but I know someone would like to explore and then get to know more about it, and maybe start using it as their niche. It is okay. So you have to just look it up more, and then get to know more about this. If you still want me to cover a video on this, hit me up in the comment section and I'll explore more about this. So with that being said, I will catch you in the next important video where we will address what is mark price and then last price. Very important key concepts in futures trading. See you in the next one. Bye for now.